Hello friends, today's topic, stock analysis on Meta platforms, formerly known as Facebook. Just a quick recap here, what is Meta platforms about? Meta platforms develops products that enable people to connect and share with friends and family through mobile devices, personal computers, virtual reality headsets, wearables and in-home devices worldwide. It operates in two segments, family of apps and reality labs. The family of app segments products include Facebook, Instagram, Messenger and WhatsApp. The Reality Lab segment provides augmented and virtual reality related products comprising virtual reality hardware, software and content. Let me start off with expressing my own view on how I see social media and what it means to me, if you will. I want to stress that all I'm going to say next is based on what I have earlier read and how I have thought of effects of social media on us as humans. These are my opinions only. I feel Meta has done great services for humankind, helping us to communicate and connect with each other all around the world. Facebook has changed communicating of humans in a historic manner and could do it also with Metaverse in the future. I have some faith in Mark Zuckerberg and his team. They surely have revolutionized the world once, why couldn't they do it again? Nevertheless, social media has also brought along with huge number of great things, some sad things for us. I feel it has made our abilities to focus on other things in life more difficult. I go to a concert and I see 75% of the crowd holding up phones during the performance to film it, as I can only assume to post it later in social media. Myself, I don't want to do this. I want to enjoy the moment fully and not be distracted by filming the whole thing with smartphone camera that isn't even so good of a quality. Also, many people have constant need to check what is happening in their circle from their smartphones and are distracted from what they were supposed to be doing at the moment, for example, working or studying. Another thing I believe is that people who spend more time on social media do feel more depressed than people who don't. I don't think many people can realize that what they are seeing being posted from all of their contacts are mainly highlights of their contacts' life. It is a very small portion of their lives only, but when you add up the highlights of all of your connections in a row, you start wondering why everybody else is partying in Bahamas or doing yoga trips to Goa all the time, or spend their time reading books in coffee shops or hit the gym all the time. You think I'm not doing much of this stuff at all, so I must be less of a person. This is clearly not true and one needs to know it, really know it. And finally, as these things can be difficult for us adults, they are more difficult for children. Personally, I think Meta and other social media platforms and politicians regulating them have huge responsibility to look after our young minds. Social media is in a way like cigarettes to me. You can smoke cigarettes if you want, but know that smoking too much of them will not do good for you. And when it comes to children, no child obviously should smoke. Regulation needs to concentrate more on children than on adults with social media too. Okay, this was kind of a clumsy comparison, but you surely understand what I'm trying to say here. The hazards of social media and internet as a whole need to be taught in school starting from young age as a mandatory subject. I think so. I'm shocked if it is not already so. If someone watching this video knows how schools around the world are educating our youth about dangers of social media and web, please share down in the comment section below. I want to learn more about this myself. Also, mental health is a serious issue for adults and even more for children, and much more money needs to be spent on taking care of it by all governments, I want to claim here. The issue needs to be tackled already yesterday. These types of things and unethical ways to attract more attention can cause serious damage to Meta's business too. This is already evident with testimonies from Frances Haugen, the former Facebook employee. I'm not going to go deeper into this subject, but I just conclude that accusations made by Ms. Haugen need to be addressed seriously, and if true, Meta needs to change its ways of operating for better. Still, as governments will regulate Meta more strictly in the future, I will say that personally I don't see this as a big threat for Meta's business. One needs to remember that same legislation will also be imposed on Meta's competitors. Just new rules for the game. Well, that was my own ethical side of thinking in towards Meta. Let's now go to the investment case itself. So how is Meta doing as a company? Here is the thing very shortly. Two segments, Reality Labs and Family of Apps. Reality Labs is Metaverse, so new hardware and software under development. It will need huge amounts of cash to be invested throughout a long time. What will come out of it? No one knows yet. It might be the next best thing in how we communicate as humans, or it might be nothing, in which case Meta will be in big trouble. Meta does not have any debt, so it has capital to do this R&D, and additionally family of apps are still growing in users and revenue in a good manner, so this segment is the cash cow that will provide Reality Labs with the cash it needs to develop. Let's now break Meta down to catalysts and risks for the stock. So here goes the catalysts in no particular order. Firstly, I want to say that Meta is and will be a volatile stock, so I believe there will be opportunities for becoming Meta shareholder with good price in the future also. Secondly, moving down the list, Metaverse shows potential gradually, so Metaverse is not expected to show pretty much anything for a long time, for many years. So every good news coming out of Metaverse business of Facebook could push the stock higher. Family of apps keeps growing in users and revenue still. If the growth continues, it will do good for the stock. This is the cash cow that at least many investors I think want to see. If not growing anymore in revenue and users much, they want to see it being very profitable and being monetized, maybe even better than until today. Facebook Meta faces privacy regulations that they have said that they could overcome with artificial intelligence. Obviously, if this is true and the targeted ads stay as relevant as ever, when privacy creates you a little bit of troubles and it could be overcome with the artificial intelligence, this might be a boost for the stock. Then Instagram and WhatsApp could be monetized better in the future. There is still potential left, I think, in both of them. One additional catalyst, moving on down the list. There's untapped potential left in emerging economies when developed economies already pretty much everybody uses Facebook's products. There is still in emerging economies new users to be found. Meta is the biggest company going after Metaverse, so most likely, according to my opinion, it is also the most likely to succeed. The big size helps here, I believe. Then another big catalyst is this time Meta is cutting the middleman out in Apple and Google when it comes to hardware in relation to Metaverse. This shows company has learned from the past and now wants to own both hardware and software themselves. In my opinion, this is an excellent move. So when you have Apple phones, their app stores, you have Google phones, their Google stores of apps, whatever they were called now. Anyway, when you have a hardware manufacturer that is some other company, you kind of need to work with that company, and sometimes that could create you trouble, as it has created trouble with Apple and its privacy regulation in Apple phones coming is a problem for Facebook's ad business. So if Facebook or Meta, I'm using the both terms now, Facebook or Meta, try bear with me, it's difficult to call the company Meta still. Anyway, now that Meta is making these virtual reality headsets and glasses or whatever, the hardware themselves, they are cutting the middleman out in Apple or Google, and they are not dependent in the future with Metaverse on any other company like Apple or Google. So that is a great thing in my opinion. Then Wall Street hates uncertainty, and Metaverse is as uncertain as anything. So again, when I said earlier that there will be chances to become an owner with attractive stock price for Meta, this is what I'm referring to. Mr. Market might decide to lose it over something very minor with Meta stock, Facebook stock, and you will have a great opportunity to buy it. This is the thing, Wall Street hates uncertainty, and when something is uncertain, you can be sure that the stock price will be volatile in the future stream of news coming in. That's just how it goes. Then one catalyst or one great thing that one needs to point out from Meta is obviously that they have excellent balance sheet, which is a great thing for any company in any industry. That needs to be said and remembered when talking about Meta every time. And finally, the last catalyst here on my list, 2.5 billion users is a competitive advantage no one else has. So with the family of apps, Facebook Meta has absolutely huge user base, and that is an asset, and that could be even said to be a moat for the company. It's huge number of people using their products is something their competitors won't be able to get that fast. It's a big asset for the company, and real could be even the source of Meta's moat in the future, competitive advantage also in the future. Then what about the risks with Meta stock? Firstly, family of apps starts declining in users or revenue due to competition, mainly TikTok. Meta was late with Reels and short-form video, competition was faster, and that hurt Meta already. So when you see revenue and or users at the same time going down in the family of apps in the future, the stock price will definitely react downwards. Then political and regulatory risk in relation to things mentioned earlier in this video, and also with the privacy. Also, I talked a little bit about that Apple legislation. That would mean less targeted ads and less effective ads. That would lead possibly to decline in ad revenue. Remember also that tech crackdowns can happen also somewhere else than in China only. So with Meta, it's moving all the time in this environment of political and regulatory risk, which is business as usual, but something that could cause huge trouble for the company. So that adds to the Meta's risk profile as an investment. So let's say so. Next up, obviously a huge risk. Metaverse investments are loss of money that could have been used to compete with other existing social media platforms or doing buybacks. So when you're investing huge amount of money in Metaverse, that money invested will need to lead to something pretty good. And obviously you have an opportunity cost every time. If Metaverse is a flop, you could have used that money in a way better way. So that is quite obvious here. But if Metaverse fails as an investment for Meta, the Meta stock will be hammered after that. So only future will tell. Well, next up, everybody's out there to attack Meta's business always. The competition for people's screen time is and will also in the future be fierce. Because the focus of the business model is advertising, if people spend less time in Meta's businesses, this will hurt Meta's revenue for sure. So this is the industry Meta is operating, Facebook is operating at. Everybody's out there to get you and get your users, your screen time away from you. You have a huge array of different businesses competing against you. This is another reason why I want to, if I invest in Meta, I need to have a margin of safety, because everybody wants to attack Meta and somebody can succeed in it in the future. Then coming back to Metaverse will need creators in the future so that it can have advertising revenue there. How is Meta going to steal creators away from YouTube, for example? I'm not sure I have picked up myself an answer for that already, so maybe if someone of you watching this video has an answer, please give it down in the comment section below, because YouTube is pretty sticky platform. I know it myself because I'm publishing videos here on YouTube. So if you want to go after YouTube's creators, you need to work for it, I would say, for Meta. Then it will be long before Metaverse is up and running, and even longer for it to turn profits in. This is evident, as I already said. Metaverse will show results years from now, and the profits will be way more later than that. Personally, I do respect long-term orientation by Meta and Mr. Zuckerberg, and actually like this. Many businesses operate only on short term, but with Zuckerberg, with Meta, it is clear that their targets are in 10 years from now, in the next phase of communicating and technology for us humans. I do respect that, and that's actually something I like to hear and see in a company. I like it. And then finally, one last, I don't know if this is a risk, but obvious thing maybe. From the most recent conference call, an analyst asked about Russia, and Meta replied that the loss of users in Russia will actually show only next quarter. So this is something for you to remember, even though Russia has only 71 million users. in Facebook and only 64 million Instagram users, which are obviously huge numbers. Huge numbers individually, but not maybe as a big portion of the overall user base of family of apps with Meta. Anyway, apparently these numbers, Russia banning Facebook products in Russia, these numbers cancelled Facebook accounts, Instagram accounts. This didn't show in just released earnings this quarter, but they will only show in the next one. So a decline in users is expected from Russia there. This is just something for you to remember in the future if you follow Metastock. Then finally, the valuation. Well, as said, due to uncertainty of metaverse, sufficient margin of safety is needed, so I'm being pretty harsh with this company. Monish Pabrai prefers Amazon's business to Meta's because Amazon tries many bets of which some work, some don't. I have to say here, I a bit disagree with Mr. Pabrai on this point. If Zuckerberg has conviction in metaverse only, let him concentrate on that only. If you are sure of something, no need to splash that cash around, in my opinion, to other stuff. Per se, I don't see this big metaverse bet only as a problem. It's, as said, it's high risk, high reward situation when you're betting your future on one thing, and this one thing is metaverse, well, on top of the old existing business with family of apps. I'm not sure if I agree with Bob Rye on this one, because if you have a great conviction on one thing and you know this will be the next big thing, then go after it and skip everything else, in my opinion. That makes the risk profile go up for sure, but it also makes the reward portion go up too. So I like that risk in there with Meta, let's say so. As said, Metastock will be volatile also in the future. If I were to buy Meta, I would do it bit by bit throughout a longer period of time. Mr. Market can show you some great entry points from time to time, and this is what I want to take advantage of. If later I will tell you what would be my entry point, or what is my valuation on Meta, but if the stock price hits that price, I will not spend all money intended to spend on Metastock there. I will wait the stock and hope for the stock to go even lower so I can average in with lower prices. Volatility is to be expected with Meta. Right now, Meta's price to earnings is now, when writing this, somewhere around 13. That seems cheap to me, I have to admit it. But still, I would describe the situation, as said many times, high risk, high reward due to uncertainty around metaverse. But I have to stress that for a company like Meta, 13 price to earnings ratio is really low, sounds really low. I'm not sure if it is really low, but it sounds really low, let's say so. Only future will tell. When I'm writing this video or recording this video now, the Facebook stock is somewhere around $200. If I assume 10% growth in free cash flow for next 5 years and have terminal growth rate of 2, I get fair value of Meta being $210 with expected yearly return of 10%. So, according to that, Meta is undervalued still today. Still, I feel Meta carries lots of risk and valuation is thus uncertain in this one in particular. Well, you know, all valuations are uncertain, all valuations are risky, you never get it right, but especially with the Meta, I think this is more uncertain than my other valuations, let's say so. And here comes the valuation. Right now I'm thinking of opening a position in Meta if the stock goes down to $170. So I'm getting excited here because $170, the Meta stock actually went there a week ago already or so. So it hit my buying price already, but I didn't buy it because I hadn't yet done my valuation. But if, and I'm predicting we will have a chance to see Meta stock again in $170, and that is when I'm thinking of making my first purchase of Meta stock. Well, I reserve an possibility to change my opinion if something happens with Meta's business, obviously, after publishing this video. But right now, today, my target price for Meta to go and buy my first batch of Meta stock would be $170. If it goes even lower, well, that's just great. I think I'm gonna keep buying then with lower prices. But 170 is where we start, and where I start. Yeah, you do with your money whatever you want, but I start at 170, and if the stock goes lower, that's probably good times to buy more. But as said, this is how I see it, and if something happens in the news, I will change my opinion and change my valuation. Remember, anything I'm speaking here is no financial advice to anyone. These are my opinions only. On this channel, in every video I don't know your situation financially, what it is, so I couldn't even possibly give you any financial advice. And I'm not giving financial advice to anyone because I'm not a certified financial advisor. I'm just telling you what I would do, my own opinions, nothing more than that. Remember it every time when watching these videos and everybody else's videos here on YouTube. Thank you. To conclude this video, let's check how Meta does in Arctic Money criteria table, shall we? Here you can see the table. As you know, 50 points is the maximum, and let's go Meta here through. Do I understand the business and the industry? 0 to 5, I give 4. I'm pretty confident I understand Meta's business as well as you can understand it without really knowing what Metaverse will be in the future. That's kind of a question mark, I guess, for everybody of us, but when it comes to family of apps, I have confidence that I understand it, so 4 points there. Then, does the business have moat? 0 to 5, I give 4. The family of apps, 2.5 billion users, that is something. That is a moat in my opinion. Maybe, if not a full 5, at least 4 points moat. So for 2.5 billion users, I'm gonna give a 4 points out of 5 on that one. Does the management team and the board have skin in the game? 0 to 5 points. Well, Mr. Zuckerberg owns just under 13% of Meta, so I'm gonna give a full 5 straight up there. They do have, management has skin in the game, Mark Zuckerberg has skin in the game, just under 30%, so that I'm gonna give a full 5 and not think about it anymore. Are insiders buying the stock? I checked the insider buyers and not really know, so I'm gonna give a 0 on that. There wasn't, at least what I saw, any insider buying happening at the moment or during recent times. Then, are super investors buying or holding the stock? Well, if you check dataroma.com, about the metastock is about one of the most owned stocks in among the super investors, so that will force me to give 5 points out of 5 on this point, because if I'm not terribly mistaken, it's like Google is the most owned stock and Meta was there right number 2 or something like that. Extremely owned stock among super investors, and that's a full 5 points. Then, are people who I follow buying or holding the stock? So this is my personal circle of people who I respect, who I follow, and see what they are doing with their portfolios. And at the moment, there is one person who is, or started rather, buying Meta already recently. So I'm gonna give 1 point out of 5 because only one person is buying and not too much yet. He or she had kind of a similar way of thinking which I have now, that if the Meta stock hits that my limit of 170, I will not spend my whole available cash for Meta immediately, but I will wait and see if it goes even lower than that with some bad news coming up or something. But anyway, one person buying the stock, so that's 1 point out of 5. Then the most important, the final point, which is from 0 to 20 points, the discounted cash flow intrinsic value of the company. 20 would be full. Right now, not, well, kind of. I think my valuation, which I initially did, was $210 would be the fair value with 10% annual expected return for Meta. So I'm gonna give 11 points out of 20 because it is undervalued according to that. But I'm not going to give any more points because with Meta, there is a huge risk, as said many times. So I need the price to go lower. I need it to be 170 before I would buy it myself. So let's give 11 points. And that all results to 30 points. And let's see, I've done this with every stock well, not every stock, but some stocks I've gone through here on YouTube, and definitely with every stock I have in my portfolio at the moment. So let's see how Meta ranks with 30 points in my whole ranking. And here you can see the ranking now. As you can see, Meta Platforms takes ranking number 2 or 3. Actually, I put it number 3 after GEO Group. GEO Group and Meta Platforms both got 30 points from me, but somehow I feel risks related to Meta. I'm sure many of you might disagree with me here on this one, but I see GEO Group a little bit less riskier stock than Meta. I know this is a controversial opinion, but this is how I see it. You may disagree with me if you want to. So I'm gonna land Meta Platforms there in the number 3 place. And now if you can see, all with green color I do have in my portfolio at the moment. In the red color I don't own in my portfolio. So some of my viewers who have watched my earlier videos might point out that the Baidu is now on the red side, and that is true. That is also a short update on my portfolio here in the end of this video. I have sold out completely out of the small Baidu position I had, but I used that Baidu money I got out of it. All that money went directly to Alibaba stock. So I transferred the money I had in Baidu to Alibaba and bought more Alibaba stock. And reason for this, just very shortly, for me, the risk reward situation is better with Alibaba than Baidu. Obviously both from China, both share a similar set of risks, but I feel that I understand Alibaba better than Baidu, and thus the risk reward position for me, myself, personally, only is better with Alibaba. So Baidu money gone, Baidu gone from my portfolio, and that money went directly the same day to Alibaba. So this was the Arctic Money criteria, the ranking, and this was Meta Platforms. So let's monitor what the future holds for the company. If you like these kinds of stock analysis, please subscribe the channel. It means a lot to me. Thank you so much for watching this video. I hope I see you in the next video also. See you in the next video. Bye bye.